Hey, Corey, nice to see you, man. Nice to see everybody. Patrick, good to see you back here. Derek's been consistent as well. And I like that you guys are having your cameras on. Steve, bro, nice to
Love
see
it.
you. Oh, Damien, nice to see you. Ian, what's up? Love it.
I
Ladies,
say
let's
I
get those
love the
cameras on.
fact that so many of you did your homework. I was up on it watching the video, so I love it.
100%. I
So
love
so
seeing
many
that as
so many
well.
takeaways. Amazing. So many people writing money comes to me easily, frequently, and abundantly. I love it. So all
Let's
right.
go.
Well,
Well, guys,
nope.
we're halfway
Nobody
through,
came in
Marvin.
and
Are you
raised
ready?
their hand.
Yeah, I
Yeah,
was
go
gonna
ahead,
say.
Michael. Kick it off.
No, I just want to say, are you ready for day three? I know this is usually the point where a lot of people they get busy, they tend to fall off, but it's cool to see 30 people and we'll probably have close to the same amount of people for what it looks like. So it's cool to see that everybody's consistent. So Marvin, I want you to talk real quick before we get into this. And you guys, whoever wants to ask your questions, go ahead and raise your hand. But Marvin, real quick, I want you to talk about the power of consistency in business because I feel like these people have it down, but there's some people that are missing that. And so just real quick, 2 minutes. I know this was on the spot. Just talk about the power of
Sure.
consistency in business.
I mean, discipline and consistency is everything. A lot of times people leave their job because I don't want to have to go in and work from 8 to 5 or, I don't want a 9 to 5. Well, let me tell you, then you don't want to be an entrepreneur because when I became an entrepreneur, for the first few years, I had an 8 to 10, feel. So, you're going to work harder for yourself initially because you gotta develop that consistency and you got to develop that mindset. And when I find myself getting a little unfocused and undisciplined and inconsistent, um, I do what I'm doing this week. I fast. So I've been doing a fast for it's my third day doing a juice fast. So I'm doing this challenge with no food. So no food. So pray for me. But I'm doing
That's
good.
impressive, man. Because this takes a lot of energy to run these events. So thanks for showing up with as much energy as you are. So guys, remember you can use the hand raise feature. Listen, we're on day three, so let's go through this like rapid fire. You guys have been doing amazing. But just a reminder, you have to have your camera on to get your questions answered, and we're just gonna go through these fast today so we can get as much as possible done. So Derek raised his hand first. So Derek, we're up for you, man.
Hey, how
What's
y'all
up,
doing?
Derek?
Hey, how you doing, boss?
I'm great.
Good, good. Question of the day is for you. What are your top three books that you read that actually really pivoted your mindset or just life?
Yeah, this is a really great question. So um I would say the Bible is one, but I won't mention that one because everybody knows about the Bible. But I would say three books that I read that changed my mindset. Number one was a book called Instant Millionaire. Really super small book. But what that book did, it helped me to learn how to set goals, taught me how to be still, taught me how to sort of do affirmations and meditate. So that was an amazing book. It's by Mark Fisher. Another book, of course, you got the two classic books, Think and Grow Rich and How to Win Friends and Influence People. I mean, those are classics. But other than those books, another book is the Magic of Thinking Big, The Greatest Salesman in the World, by Og Mandino, and those are just a few of the books. I mean, I could name so many more, but I'll stop there. But those are some power books that. Oh, and I can't forget 10X by Grant Cardone. I mean, that book really helped me to think bigger and go for bigger goals and just understand that you gotta take action, massive action.
Hmm.
So those books were definitely pillars for in my life. So
Awesome. Thank you.
great question.
Love it. All right, next, Kim, you're up.
Hi, Marvin.
Hey, what's going on,
I got
Kim?
everything set up. I'm going to meet with Tamara Dickerson on Monday to get things started with
So you gave the office a call. Great
I did,
job.
yeah. And we're going to do my 60-minute, review as well over my
Okay.
funds. But my son had a question. He's been working for a company for the past 3 years. He was just let go of, and he has money that's coming in a 401k. It's over $20,000. And
Mhm.
I told him what I was about to do with IUL and start my own bank. And he was asking is that a possibility or something he should consider since it's only $20,000? He's 27 years old. Is this a good time for him to open that possibility up to start his own bank with those funds?
He absolutely should consider starting his own bank. However, I would not just liquidate that $20,000. At this point, you might as well just let that 20,000 grow in an IRA.
Am I stuck? I can't hear you.
Can everybody else hear me?
Yeah, we can hear you. I think she's frozen.
Okay, I'm unfrozen. Yeah. Sorry about that.
So at this point, I wouldn't take that $20,000 and I wouldn't liquidate it. Pay 10% penalty on it and plus taxes at this particular time frame. Down the line, we could consider converting that maybe over into a Roth IRA because then they won't have the 10% penalty. But I definitely wouldn't just. But for new money, new cash flow, absolutely.
Okay.
Great question, and thanks for taking action.
All right, and congratulations to Derek. I don't know if you've seen his message, but he said he got approved for his policy.
Oh man, that's awesome. That's awesome. And by the way, you all, some of you may have left earlier yesterday. I did drop the link to go ahead and schedule your insurance appointment with my concierge team, your wealth creation call. So you just have to click on the link. It's the website, www.wealthcreationcall. That's part of your assignment to go ahead and start getting your talking to one of our experts to learn more about it so that you can ask some of your personal questions too. We set aside some time complimentary for you to get those questions answered and to potentially set up your own policy, structured the correct way. All right, who do we have next? Michael.
Cory, you're up.
What's up, Cory?
Hey, what's going on, Marvin? Appreciate you. Appreciate you. So I have just a few questions. First of all, so I found out recently that my pops, he had a policy, and he'd been working. And I remember growing up, my mom said if anything happened to him, house be paid off and everything. But recently, when I was talking to him, he told me that his policy expired. So come to find out, he had a term, and so it expired. So he had to go through this process of getting a whole nother policy. So basically, I have a policy. Well, I have two policies that's longer than what he's had. I know he has some money from retirement because he just retired about a year ago. So I know he has some money. So I was trying to figure out, or just learn this business so I can, help my family and things of that nature, learn about the proper way, because he just didn't know.
No, it's good. A lot of people don't know. It ain't the end of the world. I mean, in reality, that's the thing, right? Everybody thinks a term, you get what you pay for. You pay for the term, but then of course it runs out. You don't have any insurance. You did, especially if you didn't get the kind that can convert. And not only that, even if you do get insurance, the policies are so much more expensive by that particular time. And also, that's not to say that his health is going to be to get approved. So thank God if he's still in decent health. So those are just things people don't consider. Now, with that being said, he has a retirement plan on his job. So let's just say hypothetically he has a 401k. He's over 59 and a half. He's retired. I do entirely different insurance plan when it comes to taxes, right? So if you have a retirement plan over 59 and a half, then what you're going to want to do is you're going to want to minimize that future taxation. So one of the ways to minimize that future taxation is to peel a little bit off that retirement funds and put that into a policy. That way you're not using your cash flow, you're using savings that you already have, and it's just moving from one bucket to another bucket where you have liquidity. Yes, you do pay the taxes on it now, but just like a Roth conversion, you never pay the taxes on that money again. You have a death benefit. And also, because he's older, this is going to be important, there's also a long-term care benefit attached to it, where if he became sick, he wouldn't have to spend down all of his assets, and he has long-term care to protect his assets from a catastrophic event. So he saves from future taxation, he saves from a long-term care issue, eating away his account, and he also has a death benefit that he could pass on to the next generation as permanent. So that's definitely what I would do. So obviously, I don't expect you to remember all of that. If you want him to, he can also call our office. We specialize in working with people like your who are retirees and helping them to do some more advanced planning.
Yeah, actually, I want mentorship. I want to learn how to do that myself. become an insurance agent.
That's fine too. Sounds good. So if you get to the mentorship, we got you. Speaking of the mentorship, you all, we are offering an opportunity for people to apply to be a part of the mentorship today, towards the end of this call. So make sure that you're around for that, because again, I'm only showing the offer to the people who actually express interest and actually apply for the opportunity. So appreciate it. What's up, Ian?
How you doing? Sorry you can't see me because I'm actually riding in the car. I didn't want to miss this class.
I can hear you, so we're good.
Expounding on what you had said yesterday, about leveraging your relationships with people.
Yes.
I'm in the contracting field. Like I said, I own a heating and air conditioning company. We also do electrical and plumbing. What I'm getting at is I have a couple homes that I want to refurbish. And so I'm trying to figure out how I can leverage my relationships with other contractors to maybe like help me get my house done, and I can help them on the other end, or open up an avenue to help me get the capital I need to finish these homes.
All right, that's great. That's great. You tell me, Ian, how would you do it? A lot of times we already got the answers. We just don't stop and think about it. So how would we do it?
Well, if it would work, if I could talk to one of the contractors and say, hey, you do the construction side of this house for me, and your next project, I'll do your heating and cooling for you, or something of that nature.
All right. So how many people are you going to open up that conversation to next week?
I can think of 3 off the top of my head.
All right. Well, that's your assignment between today and tomorrow. I expect you to say you had conversations with all 3 by tomorrow.
There you go. Oh, and one other thing real quick. I know I'm in the right spot because I keep aligning with things you like. You said you was doing a fast. I'm on a fast. I just started a fast at the beginning of this year. Raw fruits and vegetables for the next 90 days.
Oh man, that's real dedication. I love it. So no, man, just listen to it. You know, when you're doing this fast, also remember it's not just a physical thing; it's a spiritual thing as well. So make sure that you're taking the time to meditate, because more ideas, your mind is going to be clearer. So more ideas are going to be coming to you, but you still got to be still. You still got to be still long enough to allow those to come to you. So if that's what your spirit is telling you, and reach out to those 3 people, and I'm looking forward to a testimony tomorrow.
Yes, sir.
Appreciate you, Ian.
Yep.
What up, Dwayne? What's going on, sir?
Oh, all right. Just real quick, you sort of answered the question with the first, because I was looking at with my money, that how could I use that money to fund the policy. But you answered that when you said it could either go into to a IR, to a Roth, or into a policy.
Yeah. So look at this really quick. Can you all see my screen?
Yeah, there's nothing there.
You can't, but you can see a white screen, right?
Correct.
Don't everybody draw on it. I see y'all moving around. Moving around. Leave me alone. All right. So, so let me come up here. Let me see. So let's say I got myself. I got tax-free, taxable. Of course, I want to move as much money over to tax-free as I can. Different types of columns. You got conservative growth. You have tax-free, and then you have protection. What I call protection. So growth assets, those are going to be the assets that we know is going to go up and down, up and down. You can make money, lose money. It's going to be your safe assets. You don't make much money, but we want to have the balancing act. The problem is only it's in tax deferred. What we want to do is 500K here, just making it up. Let's say we got 500K here. So we want at least we want about 20 to 30% of that money in this tax-free filter. I would say a third, but I really like. But let's just say it was 30 to 300,000. So what do? We just convert everything, move it over here to the 300,000? We don't do that, but we do it over, let's say, a 5-year period. So we have 300, say that's, I don't know, $75,000 a year. So every year, we're money over, that's about six, said that wrong, 55,000. Anyway, we're gonna convert $60,000 over here every year for 5 years. Why we do that? We do that for $60,000, but we withhold it from our assets to take care of it with, with our cash flow. But what we're gonna do by doing that, at the end of that time frame, we're gonna have 300K of tax-free cash. We're also going to have a death benefit. Let's say your death benefit is about 800K. We're also going to have long-term care. It's going to get $6,000 a month of tax-free long-term care. We needed the long-term care. So going to be able to take tax-free income and borrow $300. We're also going to be put into a position where we reduce our future taxations from the money account, because now the tax never again account. So we just took care of all of those things, and then we wrapped all of it up with a trust. And then we protect all of your assets, and everything's completely taken care of. So again, what did we do? Over that 5-year period, we reduced your future taxation. We gave you a death benefit, which allows you to spend down your figure. We protected you against catastrophic event, this long term. We potentially increase your tax-free income down the line by up to 30%. It just gave you a legacy for future generations. That makes sense?
Oh, yes. Oh, yeah.
All right. So good. Yeah, you're on the right track. That's called our complete review. We do that for our clients all the time.
All right. And then there's one other quick question. I have a 15-year-old daughter that I want to start her bank. Can I fund her bank and it still have the same benefits for her that it was if she would have did it herself?
Yeah, I fund banks for my kids.
Okay.
Before they even could do it, because when they grow up now, 10, 18, they can borrow from the store, business, college. Remember, you're the owner of the policy, but not the insured.
Okay.
Or they, so you might take ownership of it, but insure them, and then maybe you flip it over and you let them take control over it one day.
Okay. Sounds
Appreciate
good.
it, sir.
Yeah, thank you, sir.
Absolutely.
All right, Sierra.
Hey, good evening. Okay, can you hear me?
Hear you.
You can hear me? Okay, perfect. Yeah, so my question is similar to, I think, a couple of gentlemen ago. So if we're not currently life insurance agents, but interested, I guess what would be some of the, skills you think would be helpful to have to be successful as a life insurance agent? And then also, what amount of time would you say would you need to dedicate starting out just to kind of really maximize, the number of people you're able to reach?
Yeah, I mean, I got people right now that I got extremely successful as agents who one was a police officer, one worked at a hotel. I mean, you don't have to be in this industry. You just gotta have the be humble, be coachable. You have to be a go-getter. You have to be willing to work. You have to have the dedication. I feel like all of these concepts could be taught.
Right. Okay.
But you have to be a self-starter as well. Like, of course, you come to my trainings. It's great. I'm telling you, the people are successful. They come to my trainings, but they also study outside of my trainings because they're dedicated to learning it. You're dedicated to learning it. The fun part about it is that you're learning it for yourself. You're learning it for other people. So this industry is just so unique that if you want it, you can get it, and people want what you got. So it's a reason why it's one of the richest industries there is, because people need and they want what we have. So she presented the way that I presented. So what's different about me is most people presented life insurance as, you know, see my mouse, that's weird. Life insurance, like, well, you need life insurance so you won't have to start a GoFundMe, or you need life insurance because when you die, you don't want people to think yet, which is all true. But I made life, and I didn't look at life insurance just for the death. I looked at life insurance for the life. Now, by default, you're using it for the life. Obviously, it still benefits you. So you just got to know how to hit people's desires, what they actually want for them now, and then they're going to want to get as much life insurance as they get.
Okay. No, that's
Appreciate
helpful.
that,
All
Sierra.
right, thank you.
It's weird that I can't see my mouse anywhere. What's going on? All right.
All right. So Damien, you're up.
Hey, what's going on, BGB family? How we doing tonight?
Good. What's up with you?
I'm good. I'm good. I have a quick question.
Just now figure what you was talking about. BGB. This is got it. Okay.
Yeah, I have a quick question. I hate to be the negative Nancy, but I haven't heard anybody touching it yet. So in the event that one of our clients decide that they are no longer able to pay, or they come into a hard time and they're no longer able to pay the policy and they have cash value in there, what happens to the policy?
Yeah, that's a great thing. So this is what I educate my clients on. When you build right, there's flexibility involved. So let's say a client is paying $10,000 a year, just making that number up. Well, if you did whole life, for example, you get a paid up addition rider, which means that even though they put 10,000, only maybe $9,000 of that went to the cash value. So they're paying a premium. That's $10,000.
Hey Marvin, I think your Zoom's cutting in and out. I think Damien, I heard you fine, and everybody's saying Zoom is glitching. I think it's on your side.
I don't know what's going on.
Because I think everybody can hear Damien fine.
Hold on.
Is that better?
No, it's me. I'm leaving and coming back.
Okay, we'll be right here. All right. Hope you guys found value. Can everybody still hear me? Like, is mine chopping up, or are we good? Let me know in the chat. I just want to make sure we're all clear. Okay. Steve says we're good. Okay. Just want to verify to make sure that it wasn't anything else. Sometimes internet can be a little crazy. He'll be in just a moment. So again, thank you guys for being here. I hope you guys have found value so far. It's going to be really exciting just to hear as we continue on. We still have a lot of trust to talk about. We still have Denise and a few others coming in. So hope you guys stay till the end of the week, because it's only going to get better and better and better. So, all right. Marvin's back.
Can y'all hear me now?
Yes.
Okay. So when you structure it with a paid up addition rider, the only thing technically they have to pay is the amount that goes toward the death benefit plus an additional $100. So if they pay $1,100, they can keep a policy that's even $10,000 still active and live to fight another year. Another thing they could do a lot of times that they could if they don't have the cash, if they fall into a hard time in a tough year, then they can actually use their cash value to pay for the premium for that year. Another thing that can happen is if it's a disability or something like that, and that's the reason why they can't pay, they had to leave because of disability. There are disability riders that will still pay your premiums for you if you fell into those situations. But worst case scenario, they can't pay their premiums and they decide they want to quit the policy. Then all they have to do is just they actually get to keep the cash value. It doesn't go away.
Okay. All right. That was it. Easy question, right?
Absolutely. Easy question when there's an easy answer. Steve, what's
you're
going
up.
on? Who's next? What's up, Steve?
Oh,
I
Steve,
can't
we
hear
can't hear
you.
you. Something with your mic's not working. So just make sure you're checking that microphone setting.
You're off mute, but it's just still not working.
No, we can't hear you. You may want to hop out and hop back in, but we'll make sure you get up here the hour. So we'll go ahead and go over to King. What's up, man? He's been up here every day asking questions. I love it.
Yo, what's the deal? How y'all doing today?
I'm good. What's going on with you?
For sure. So the question I would have is, if you were doing your first business year taxes, how would you go about filing your first business year of taxes?
Great question. When you make income, especially as a 1099 person, taxes could destroy you. So what I would do is I would always set aside just any money that I have. I have two separate bank accounts. I have multiple accounts, but I have my account coming into my business, and then I have a tax account. So every single month, I'm looking at my profit and loss statement, and I'm saying, okay, I had this much money that came in from revenue. This is going to be my profit. So let me take 25% of that and put it into my tax account, because I'd rather have it sitting there in the tax account. And also, I pay quarterly estimates. So I'd rather do that and know that I got the tax money than to look at my account and just think that I got so much more than I got. And then all of a sudden, I'm like, I'm taking all this cash, reinvesting it back into the business. Then the tax bill comes. They don't care that you reinvested it back into the business. You owe that tax money. And then I've seen people have to liquidate stuff in order to take care of it. So just start a separate account, put that percentage aside in that tax account, and just be ready for it.
For sure. Appreciate it.
Appreciate you.
All right.
We
So
got
let's go ahead and
next.
let me see if Steve is in here yet. I want to make sure we honor him. Steve, go ahead and use the hand raise feature if you're in the room. I want to make sure we pull you up. I think I got the right Steve here. Let me see.
He may not be back. Up there he is.
All right. Did you get in here, brother? I still can't hear you.
All right. You want to just type it in the chat or type something in the chat, and then I can answer it for you. Okay. Go ahead and do that. And then
All
we'll answer his question last, but let's go ahead and take care of, I think it was Mr. Rivas. What's going on, sir?
Thank you, man. It's Hatter. I know you kind of chopped it up the other day, but it's the first
I was
name
going to
is
say Haydar, so I'm glad you told me. It's say it again.
Hatter, like the Mad Hatter.
Hyder.
No, Hatter.
Hatter, or like Hatter,
that's
like
it.
like I had her at one point, but she left.
That's what I had her exactly.
So
I for the sake of time and respect to everybody here, everybody's time. So I do have like a 3-pronged question, but just to clarify, I pay myself a payroll. I'm a broker and investor, pay myself payroll for several years. I have a 401k. I guess somebody asked that earlier. You don't recommend liquidating that if it's it's like 20K. So
okay.
But the reason I ask that is because I do have IULs. I have my own, I have my kids. And so thinking about just throwing it in there, like liquidating that 401k, throwing it in there, is that something that's advisable?
Great question. So here's what I would do. First off, you say you pay yourself. So are you LLC? Do you file S Corp?
S Corp, yeah.
Okay, so you pay yourself a reasonable compensation, so that's good.
Yep.
So what I would do with that $20,000, how old are you? Old are you, if you don't mind me asking?
44.
Okay, so great question. Oh, that's a great year, 44, man. That's a angelic year. So,
Sure.
what I would do, Hatter, is I would take that $20,000 and I would convert it into a Roth IRA, not an insurance policy.
Okay.
You'll end up paying about $3,000 or so for the taxes. You don't have to pay it right away. You will have to pay the $3,000 in taxes, but the $20,000 will go into the Roth. You can invest it aggressively since you're only 44. Put it into some stocks, whatever stocks you want to put it into. Let that thing sit, because that $20,000 you want to grow it. And let's say if it makes $200,000 over time, now that $200,000 is completely tax free. So I like what you're doing with the IUL, but also don't forget, it's also okay to have money in the market as well. And that's the perfect money to do that with. You convert that over into a Roth account, and then you invest it into stocks where you can't invest the IUL into stocks.
Yeah, I have my money in different vehicles. So I have money in stocks and crypto and things of that nature. So
Perfect. So that portion of your money, don't look at that as the money that you use for IUL, because you don't want to pay 10% penalty. That's the problem, because you're under 59.5. So I would just use that money and convert it into a Roth and just let that thing just grow.
Okay. One more quick question, if you don't mind.
Yep.
I'm also an investor. I flip properties and portfolio and what have you. The gains that I get off of any flip, can I use those gains and throw that into the IUL for to be my bank, if you will?
Absolutely. Without being taxed is the issue, because
it's tax deferred. I know it's kicking the can down the road. I know that. But
no. What I mean is, you can't do like you know how you could do a 1031 exchange from one property to another property, and then you don't pay the taxes and you kick the can down the road. You can't do that. You can only do that with like to like investments. So you can't do that with the flip from the property into the IUL. You can only do it from one real estate to another real estate vehicle. So yes, you will. I mean, you can't kick the taxes down the road that way, but what you can do is when you pay the taxes on it, but you still put it into your IUL, and then now the next time that you do your next real estate property, you borrow against that for the next property. So you still, I mean, it's not kicking the can down the road. You do pay the taxes, but there is long-term tax benefits and growth benefits by going ahead and paying the taxes and putting it into the IUL. Unless you are putting it into another property, then it might make sense to just go ahead and do the like-to-like transfer.
31, yeah. Got it. All right, cool.
Great question, though. Great. I like the way you're thinking about that for sure.
Appreciate it. Yep.
Now I'll tell you, I have had some people do this. I don't do it a lot. I'm not even recommending it. Just telling you what some other people do is they in that real estate, they get the equity out and they do like a equity line of credit, and they use that money to put that into a life insurance policy, because when you do an equity line of credit, it's not taxable. So you're moving it from one place that's not taxable and moving it into the life insurance policy. So that I have heard people who did that. Now, I can't legally advise you to do that. I'm just telling you, I know people who have done that.
Okay. All right, maybe I'll pick your brain on that, because that'll be something new for me. So
absolutely. Appreciate it.
Thank you.
All right, Marvin, is it cool if we stop on YouTube and go over to the Facebook now?
Yeah, does Steve have a question? But let me go ahead and stop that on YouTube. Let me see.